Tesla is still incredibly affordable. There are no other mega-cap road stocks with volume growth of 30 to 35%, trading at 40 times earnings, and this trend will continue. You can see the adoption of electric vehicles skyrocketing. Take California as an example, where it is currently 177%. Tesla is the best way to capitalize on China's 22% surge in EV adoption. Additionally, I believe that over the next few months, there will be a lot of catalysts that will resemble the end of 2019 as we approach Investor Day, a block first quarter, the arrival of a Cybertruck, and the improvement of some sort of FSD single-stack product. Today we unravel the enigma piece by electrifying piece. This is not your typical stock news, this is a revelation that will challenge your perspective. As we look ahead to 2020 with all the catalysts coming in the world of finance and electric vehicles, there are moments that send shock waves through the market. Along with those moments is this one financial titan with insights that could reshape the landscape of Tesla and beyond. He's dropping knowledge bombs that could alter the course of history. Engage your thoughts and spark your creativity. Keep checking back as we explore the data, insights, and prospects for electric cars. Tesla and the financial world's very fabric. Are you ready for the seismic shift in the investment world that Gary Black has to offer? Today we reveal a groundbreaking discovery from the finance guru that has the potential to completely transform Tesla and the electric vehicle EV sector. Join us as we unravel his insightful words, uncover the enigma, and investigate the implications for both investors and enthusiasts. Stay tuned for an adventure that will alter your viewpoint and spark your creativity. This isn't your typical stock news story. This discovery has the potential to alter the path of history. But first, be sure you like. Furthermore, join our channel. Let's get started. This is the Test Stock News event you won't want to miss. In the not-too-distant future, some of these companies may be completely edged out of the EV market. Currently, Tesla offers its Model 3 at a post rebate price of $32,000, which is already lower than the average price of conventional internal combustion engine cars in the United States. However, Elon Musk's ambitious plan to introduce a $225,000 Tesla model within the next 2 to 3 years could be realized. The landscape of the electric vehicle industry is becoming increasingly competitive. A substantial game-changer accelerating EV production in the interim. Let's focus on a developing earnings alert regarding Ford. The company's shares have suffered as a result of missing revenue and profit targets in the third quarter. Jim Farley, the CEO of Ford, has been highlighting the company's ongoing commitment to prioritize hybrid vehicles given the declining demand for electric vehicles in the U.S. This is a recurring issue for Ford, as one of the contributing factors is the ongoing issue of warranty costs, which continues to pose challenges for the company along with the impact of the UAW strike. As the top American EV manufacturer right now, Tesla is undoubtedly leading the field. This position is expected to hold despite the difficult market conditions as Tesla has been increasing its EV fleet and stepping up production, while many other EV manufacturers are finding it difficult to keep up. Some of these companies are even thinking about quitting the race entirely. Today we'll examine the reasons behind the revisions made by several automakers to their EV sales forecasts and the potential ramifications for Tesla and its stock. When assessing Tesla's stock, questions arise regarding its primary classification, a tech company or an automaker, given its estimated revenue of approximately $100 billion, which is growing at an impressive 4% annually. Whether Chinese manufacturers can threaten Tesla's dominance with their cost-effective manufacturing procedures and battery technology is the main question. Though not all automotive giants are enjoying equal success in the EV market, some major players including Toyota, Ford, and GM have recently revised their EV sales forecast for 2023 and beyond, citing various challenges and uncertainties. This shift could have significant implications, potentially bolstering Tesla's competitive advantage in the already crowded EV industry. Given Tesla's world-class production facilities and rapid over-the-air software updates, EVs are gaining widespread popularity among consumers, driven by their eco-friendliness, technological innovations, and government incentives. The global semiconductor shortage is one of the main reasons why some automakers have revised their EV sales projections lower. Fit Solutions claims that this shortage has far-reaching effects, disrupting the supply and production of essential parts for electric vehicles. This shortage of chips has significantly impacted the growth of EV sales throughout 2022, affecting many companies in the process. For example, Toyota, a well-known player in the automotive industry, was forced to significantly alter its forecast for EV sales. It reduced its initial estimate from 202,000 to 123,000 units. This large decrease reflects the difficulties encountered in the Chinese market, where the lack of semiconductors has made the already fierce competition on prices. In spite of these obstacles, Toyota expects strong fiscal year-over-year growth. Nevertheless, in response to the shortage of chips and increased pricing competitiveness in the EV market, the business is strategically moving its emphasize the use of hybrid cars. Through this calculated strategy change, Toyota is still able to reach its total sales goals while reducing some of the risks and difficulties brought on by the lack of semiconductors. However, even if the business projects selling about 9.6 million cars in this fiscal year, it also expects the global semiconductor shortage has essentially forced automakers like Toyota to reassess their EV sales expectations and adopt alternative strategies to navigate these difficult market conditions, which could have a profound impact on the EV landscape and potentially further solidify the auto industry. A reduced share of EV sales in its overall portfolio. Tesla's standing as the leading company in the sector. The ongoing pandemic has caused widespread shipping delays, which have had a twofold impact. They have increased shipping costs and the risks associated with transporting vehicles across different regions of the world. As a result, some major players in the industry have been forced to make strategic adjustments. This is another significant factor that has caused some auto companies to reevaluate their EV sales projections. For example, Ford's ambitious aim of reaching 600,000 EV production units has been delayed by a year due to deferred EV manufacturing investments totaling around $12 billion. It's important to understand that, aside from Tesla, the majority of other EV manufacturers are dealing with the effects of declining prices. General Motors has also chosen to delay the production of several EV models in order to protect its pricing strategies in the face of these logistical issues. For example, Ford recently retracted its projection for full-year earnings, citing ongoing pressure on electric vehicles. Remarkably, the business reportedly suffered losses estimated at $36,000 for each of the 36,000 electric vehicles it supplied to dealers in the third quarter, exceeding the $3.3235 losses per EV experienced in the previous quarter. CEO Jim Farley revealed the company's plans to slow the expansion of money-losing EVs while directing resources towards the commercial vehicle segment and increasing sales of gas-electric hybrids over the next 5 years. During the Ford's second quarter earnings briefing in July, the limited capacity of battery production is a crucial factor that greatly impacts the availability and affordability of EVs batteries. Tesla can further establish its dominance in the EV market. The developing electric vehicle market, characterized by a global lack of semiconductors, numerous automakers have had to lower their forecasts for electric vehicle sales due to pandemic-related shipping delays and limited capacity for producing batteries. These issues have also had an impact on other stakeholders in the industry. As we conclude up our conversation, we'd love to hear your comments on Tesla, which stands out as a resilient and innovative force ready to capitalize on the shifting market dynamics. What is the valuation of Tesla stock, and do you think it will continue to climb in the future? For more updates on Tesla and the always changing electric vehicle market, how do you think Tesla can further capitalize on this chance to enhance its position in the EV industry? The electric vehicle industry. Thank you for watching today, and we'll see you in the future video. Don't forget to like and subscribe to Tesla Insights.